afternoon. This is Business Lunch. I'm Sonia and with me is Nisha. It's an absolutely quiet start to trade. In fact, the afternoon, not too much in terms of the headline index. The only thing is that the mid-cap index has recovered from the lows. The Nifty has also recovered from the lows, but largely you'd have to say not too much traction. Cash market volumes are high though, or more than 22,000 crores is what you've seen in terms of cash market volumes. And if you're looking for big movers today, it's names like Tata Motors, a lot of the IT and pharma stocks like Wipro, Cipla, DRL, Sun Pharma, etc. that are looking pretty good at this point in time.
Oh yes, hi Sonia. So you mentioned Tata Motors. In fact, take a look at that particular chart. It's really seeing some bit of relief, but it had really been knocked down substantially. In fact, if you take a look at the 6-month chart, it is trending at the 6-month highs at the moment. But if you look at the year chart, 52-week highs, that is really, that particular figure of 52-week highs is really elusive at this point. So that's the picture really coming in from Tata Motors, but it's also, remember, the overall auto sector that we are focusing on with a lot of focus on really where the demand is going and how the inventory is really panning out for the company. So the Federation of Automobile Dealers Association has released its data for the month of March and says that the worst for the auto industry is now behind us. Sonia has more details on that. Sonia, what is coming out? Is there a semblance of some bit of relief in the overall sector, which has seen quite a bit of downturn and concern coming in?
Yes, you know, I just want to point out that the most important line from FADA's release is not that demand has picked up. Demand has not picked up. It's just that the demand decline has plateaued. So what they're saying is that the worst of the slowdown is now behind the auto sector. They expect a plateauing of declining demand, so at least it won't get worse from here. They also say that they expect sales to stabilize in the current normal range over the next 4 to 6 weeks. And the good part is that inventory levels have reduced across segments, which was expected in any case. So current inventory levels have gone down in the passenger vehicle space to 40 to 45 days. Two-wheeler inventory levels have corrected from 100 days to about 45 to 50 days. And commercial vehicle inventory levels have corrected to about 40 to 45 days. The vehicle registrations have gone up month on month. So about an 8% overall growth in vehicle registrations is what you've seen. Passenger vehicle registrations are up about 5% and commercial vehicle registrations are up almost by about 2% or so. The important bit, as I said, is not that demand has picked up. It's just that the demand decline has plateaued. In fact, there are still a lot of concerns with respect to what happens post-elections. Will there be pre-buying ahead of the BS6 transition? Will this pre-buying come on the back of higher discounts? All these questions still remain unanswered. So let's listen in to what the heads of both FADA and the Federation of Automobile Dealers and the Society of Industry for Automobile Manufacturers, SIAM, had to say earlier on.
I think from the past 3 months, we have been highlighting that two-wheeler inventory is beyond levels that we have never seen till now. And as you rightly said, was even touching 100 days in a few geographies. And this was very alarming. I think all the dealers have taken it up with the principal. And as you can see from the March wholesale numbers, it has been regulated. It has come down drastically. Of course, a growth of 10% in retail also has helped. As you can see in March, we've grown by 10% vis-a-vis February. Both these factors, lower wholesale supplies and a higher retail, has helped reduce. This is a general trend of the inventory, 45 to 50 days across the country. It could be lower in some areas and it could be higher in some areas, but this is a general average of what we've taken from our members.
So FY20 is based on obviously how FY19 has gone, and let me give you a little bit on FY19. FY19 overall, the automotive industry with all segments put together has grown by about 5%, which was in previous year around, let's say, 7%. And it's clearly been a story of two halves. The first half was very good, but the second half was not so good. In fact, it was negative. And hence, overall, the growth for the automotive industry was at about 5%.
All right, so that was about the auto sector. Let's shift focus to the IT space then, and it's the top stock in news today. Wipro gains on reports that SEBI has given a nod for its $1.7 billion buyback program. In fact, take a look at that particular stock, over 2%, 2.5% up right now, 281 levels, and buyback is expected to be at a substantial premium to the current market price. Reema Tendulkar joins us with all the details.
Well, these are reports right now, which CNBC-TV18 has not managed to independently verify, so it cannot vouch for its authenticity. But reports suggest that the company has got a SEBI nod for a $1.7 billion or a 12,000 crore buyback at a price of 320 rupees per share, which is roughly at a 15% premium to where the stock closed yesterday. And this will be bigger in size compared to what they've done in the past. In 2016, it was a 2,500 crore buyback. In 2017, they raised about 11,000 crore rupees via the buyback, and it's likely to be announced next week with the numbers. So just doing the math with what we have, 12,000 crore of buyback at a price of 320 rupees. So the company can buy back approximately 37.5 crore shares, which means an acceptance ratio of 6.2%, because the expectation is that the promoters are likely to participate in the buyback. But they've got a holding of 74.3%, which means the buyback price needs to be attractive enough for the minority shareholders to participate. The net cash in the books is a little more than 20,000 crore rupees, which means the buyback size would be about 60% of the net cash.
Okay, Rima, since you are with us, what about Vodafone? The rights issue opens today. I mean, it's the largest fundraising by any Indian company. Give us more details on that.
Yes, this massive 25,000 crore rights issue by the telecom major Vodafone Idea opens today. It closes on the 24th of April. This, remember, is the largest rights issue that we've seen by any Indian company. In India, the company will be issuing 2,000 crore fresh shares at a price of 12.5 rupees per share, which was at a 60% discount to when the company had initially announced the rights issue. Now, the promoter commitment stands at 18,250 crore from both the Vodafone Group as well as the Aditya Birla Group. For the rest, 6,750 crore, they will be tapping the minority shareholders. But there, the management seems quite confident that the minority shareholders will participate in the rights issue. They've said they've seen strong interest from the existing and the new investors. The implied price of Vodafone Idea post the rights issue should be around that 18.5 rupees per share.
All right, thanks so much, Rima. And of course, a point to note also is that a big investor, private equity investor like Axiata is there in Vodafone Idea, is unlikely to also exercise its rights for the rights issue as well. So that's something to be noted. It holds 8% stake in the company. Now, as we slip into a short breather on Business Lunch, here is some opinion coming in from IMF Chief Economist Gita Gopinath on India's growth forecast. Listen in and we'll be back with more news and updates on the other side.
There are important revisions that were made in 2015 as a part of modernizing India's national account statistics, and so that is certainly welcome. I mean, that said, there are still some issues that need to be fixed, and this we have flagged before with respect to the deflation, or the deflator that's being used for estimating real GDP. I mean, this is something we have flagged in the past. With regard to the newer numbers that are coming out, I mean, we are paying close attention to it. We are, speaking closely to our colleagues in India, and, I think then we will make a determination based on that. India is projected to be growing over 7% both in 2019 and 2020, which makes it one of the largest, fastest growing large economies of the world, which is why it's even more important that the statistics coming out of China out of India are transparently communicated, and that because everybody is watching India at this point.